The next thing we look at is the gasoline market /RB, and the conditions are quite similar in here, where you see upward momentum conditions, cycle conditions that are positive. Note in here, this is the light crude cycle bracket right down over here, and the gasoline market has a little bigger cycle that's showing up, but it was influenced seemingly by light crude a little bit right there. So it's still pointing upward in here. Everything is positive. You're getting the signals in here. It did turn neutral for just this brief period on this correction where it hit the support zone and then turned up and turned positive again. So gasoline market still looking very strong when you look at that. And again, the market will tell us when this top does come in place, or give us some warnings about the potential for topping. And this is only a symbol that you would consider on the long side when you look at this, because I said this in the live event on Tuesday, and if you didn't see it, you can watch the replay. That, you know, my old mentor back in the 70s when I started trading, the owner of the clearinghouse, said to me, in his he was a trader in the corn pit and owned the clearinghouse. In his gravelly pit trader voice, you want to be caught long at the tops and you want to be caught short at the bottoms. That means you're going to maximize each of the extended moves that you get in markets, and that's especially true in commodity markets that just tend to go and go and go. Look at what's happening in the grain markets right now, as they went to the upside relentlessly and now moving to the downside pretty relentlessly. So the trend, the momentum conditions are so important. I put in these yellow areas right in there. When you get into these or close to these corrective zones, that, you know, it's important, really important to wait until you really get the signals. But you can see right in here where the nesting went on for all three cycles, and where the nesting went on for all three cycles. Well, once momentum turned negative here, you went into the steep decline. Right over here, the momentum turned negative. Actually was even above there, and you get this big decline right here into this bottom. The same thing right over here, and this just coincidentally was the COVID, I'm sorry, what was the COVID crash? That was back in March, so that would be, where is that? It would be not even aligned there properly. It was right here. Oh, I'm sorry, it was right there. What am I looking at? So that was the COVID crash right over there into April. So that aligned with that, and you can see what's going on right over here. So, you know, part of this lesson for today is not stepping in front of a moving train and waiting for the market to tell you, but you can see where you're looking at all three of these cycles coming down in here, that essentially is the spot where in between these two warning timing stars right there is where the low is likely to be. So we're going to keep our eyes out for some message that this is turning down, but you don't want to be short yet, because you're going to spend too much of your capital, your money, real money capital, and your emotional capital being on the wrong side of the market. So that's why I wanted to go back to that and just give you that sense for, well, when this market peaks, what's going to happen is that a key low will be broken in the cycle. You begin to get a negative cycle configuration on the daily, and it will start telling you that. So I think that's really the important message, and why we want to really stress the, you know, take it easy. Give yourself a break and not be on the wrong side of the market, because you're anticipating that the market will turn because, well, it's come way too far, right? Well, you'll be a lot better off in the long term over the decades that I hope you'll be trading to be considering what I just said.